Well, a very good afternoon. We've just gone after 12:30, the advertised time for what I think is going to be one of the, I'm going to say highly anticipated because, I like that sort of language, but certainly as a real estate enthusiast, one of the most exciting updates that we've had. We started doing these around that COVID time when there was so much, there was such a thirst for information about what's happening in the property market. And we've continued to do these every quarter for the last 5 years. And why is that so relevant? Well, this is the first time in 5 years we've actually seen interest rates fall, and it was only a couple of days ago. So my name's Haesley Cush. I'm going to help facilitate what should be a really interesting 30, 45-minute conversation with a lot of data for you, what's happening in the Brisbane market. Nerida Conisbee is with us today. Nerida, the Chief Economist for the Ray White Group. She's going to lift that lens up a little bit and give us a macro view of the market. And then we're going to bring it back down into what's happening in the southeast corner. And to do that, we've got Senior Agent of Ray White Collective, Christine Rudolph, and Principal Partner of Ray White Collective, Matt Lancashire, to take us through what's happening at the ground level. So, that is a big breath to take in and a big mouthful to take in, but I've just got to say, there has been a big change. The December quarter, which we turned up here today to review, that October, November, December quarter, had a really interesting end. The first half of that quarter was very different to the second half, and we are going to give you some insight into what's happened already in 2025. But I think let's get into Nerida. What is, you must have loved, you called it, it happened, 25 basis points. Well, I know you got a lot of information, but was it pretty big news in your world?
It is big news. Yeah, property industry loves an interest rate cut. I guess it does reflect the fact that the economy is slowing down. So there is a lot of stress in the economy. So it's obviously not all good news, but definitely even the lead up to the cut had quite an interesting impact on the market. So I'll talk through that today. If you go to the first slide.
Yeah, Joe, I'm just, my clicker here is not giving me the joy that I was hoping it would give. So you're certainly, give me that remote control if you could. Okay, so what's the outlook looking like?
So if we go to the first slide, I'll talk through interest rates first. So we've had the first cut, as you said. It's been a long time. The main reason being is that inflation is now within target. So it's sitting at that 2 to 3% range. It has actually been in target for quite some time. So for 2 quarters, it's actually been in target. But the Reserve Bank were really holding out, primarily because the economy was looking okay. So they weren't particularly, they would have been, concerned, they're always concerned, but they weren't particularly worried about the slowing down in the economy until January. And so in January, we started to get some interesting data through. We got an unemployment rate number that was higher than expected. Inflation went down more quickly than expected. And by around mid-January, the market started really changing their view on what the interest rate outlook was for February. So we kind of went from a 50-50 chance in December, and then by mid-January, it jumped to about 85%. And then,
I remember reaching out to you. I like to send that little text. I want to know, Nerida, what's your bet? And you were... your response, almost certainly.
Yeah.
And that's the economist in you, the almost. But I liked it, right?
Yeah. It was, so that by the time they cut, it was interesting, even the business world's view, they were like, the Reserve Bank are under pressure from the government. And I legitimately don't think that's the case. And I think probably one of the issues is we're still seeing quite a divergence in the way households are behaving. Obviously, some people are in very secure, well-paid jobs. They're not really feeling it. But then other people who probably not unemployed, but may not be earning as much, may have a higher mortgage, might be younger, have been really, really feeling this cost of living crisis. So I think that really pushed them to make the cut.
All right, Joe, I'm still having some trouble using my remote. I don't know how that's happened. We tested it before, but the market's factoring in 4 cuts.
Yeah, so this can change a lot. So, we're only at the start of the year. Things can change significantly. At the moment, the market is pricing in 4 cuts, but a lot can change, and probably the big one will be around what's happening in the US. So tariffs in particular have a very inflationary impact. They do lead to high levels of inflation. We don't exactly know what will happen to tariffs this year. So I think it's really just a watch and see. For now, it looks like a hold in April. The next RBA meeting is actually on April Fool's Day, so that's not too good. But
so these tariffs, is this bit I've got control back? Thanks, Joe. Is this the bit about what the American market's doing and these announcements from Trump? Like, will that flow down here?
Yeah, absolutely. So we don't trade much with the US. I think they're our fourth or fifth biggest trading partner. They've obviously threatened to put tariffs on aluminium, so that would have some impact on areas that produce a lot of aluminium. I mean, we're not that dependent on that as our economy, but the big one is China. So China putting tariffs on the US putting tariffs on China will raise prices. It will raise prices for us. So that's a bit we're not quite sure.
Not sure. And do you think that's playing a role into these 4 interest rate cuts, or that's a separate
I think
data
it's
set?
separate.
Okay.
That's fairly aggressive, the 4 cuts at the moment that the market's expecting. I think based on the 4 cuts, I think they're expecting that a lot of these trade issues will even out. But again, we don't know. And I think this is a hard thing with forecasting, that you can kind of get more accurate the closer you get to the date, but trying to forecast the next 6 to 12 months becomes really, really difficult, particularly in an environment at the moment where globally there's a lot going on.
Okay, well, let's keep moving in this property-centric right across the country.
Yeah, so just having a look around the country, you can see here Queensland and Brisbane in particular are the top growth cities and states. Perth is actually doing better in percentage growth terms, but in terms of actual number of people, it really is Brisbane that's topping the list. So you can see there over the past 5, what are we doing? We're looking at 10 years or 5 years. So I'm trying to look at those.
Yeah.
They're looking at 340,000 additional people. So that I think is a better measure, because every 2.5 people needs one house. So you add in all these people, and therefore it creates a lot of demand for housing.
It really is quite extraordinary when you see that Brisbane, in number of people, beat Sydney and Melbourne on the 5-year trend line.
Yeah. Yeah, and it's interesting too, because I think, there's been a lot of discussion about reducing international migration, which will impact Melbourne and Sydney first, because they do get the bulk of it. But what we really can't control is interstate migration, and that's really what's driving Brisbane.
Yeah.
So that's people moving Melbourne and Sydney, that's really creating a lot of pressure on housing demand.
Melbourne surprises me though with the amount of growth that they've seen, considering there was a mass exodus out of Victoria to Queensland.
Yeah, that's international migration.
So all but in there, yeah.
Yeah. So New South Wales and Victoria are actually net losers of people because they moved to Queensland, but they do get more international migrants. And people go to Sydney, look around, too expensive, and then head north. So.
Good for us for now.
Yes, exactly. So around the country, this is up until January, so 5.9% growth year to 12 months to January. You can see there Brisbane now pretty much on par with Melbourne with 9.5% growth. Gold Coast really expensive now, and 1.2, but obviously Sydney still the most expensive market, but really slowing down quite dramatically at the end of last year.
9.5% growth over a 12-month period is extraordinary.
It is extraordinary. It's really a reset, because if you think of Brisbane, I think I've got maybe not the next slide, but go one more. And then one more. So you can see, I don't know where it is. It's probably about 3 on. Anyway, but Brisbane was quite cheap 4 or 5 years ago, but it's not cheap now. So I think that's been the big shift that we've seen. Units also, I think that's unit prices. So units actually doing better in terms of percentage growth than what we're seeing in houses. So that's, again, a very unusual trend, but it does reflect with the fact that we haven't really seen much construction taking place of apartments here, or anywhere actually, but particularly in southeast Queensland. The other interesting trend, though, we have seen nationally is cheaper properties are seeing stronger growth than more expensive properties. And that's a bit of an unusual switch that we've seen in the last 12 months. So I haven't put a chart up today.
With the affordability ban, is that just more people in that part of the market?
Normally luxury does better than kind of a cheaper home, but I think what's happened, because interest rates have risen so much, we often think people buying luxury property aren't relying on debt and mortgage, but they usually are. Or even if they're not relying on it, they're taking advantage of low debt. So it does seem to be that higher interest rates are impacting them more than is usually the case.
One of the things we've experienced in the rental market, which is we were having a quick discussion offline, is it's not as hot as people would expect this year as it was in previous years. And one of the reasons for that could be about this regional Queensland is people just got priced out of the market. So they had to change postcodes and they had to go and find where the property sat inside their affordability band. And I don't know whether that has played a role in moving people beyond capital cities, especially with remote working playing more of a role. But certainly we have seen that in the rental space.
So just looking across the country, I mean, this is interesting because Brisbane does sit in one of the stronger markets, but we have seen this really strong divergence between what we're seeing in Sydney, Melbourne and Canberra, which are now looking very, very weak. Compared to Perth, Brisbane, Adelaide, which really are the top performers. So end of last year, everything slowed down, but you can see that slowing down for the stronger markets means still 11.9% annual growth, which, you know, it's hardly a weak market, but it's certainly, you know, it's slowed, but it's a very different market to what we're seeing in southeastern Australia. And then I suppose the interesting thing at the start of this year is that we did see a big pickup in January. So this is interesting. You spoke a little bit about it before, but end of last year, November, December, we actually saw prices fall very, very slightly. And on the ground, you know, we were hearing that open for inspections had really slowed down. There was, you know, fewer people out there looking to buy. But January, suddenly it's picked up again and picked up everywhere. And I think what happened is that January was when everyone started talking about the interest rate cut and it started to become more real. And I think that started to bring a bit more confidence. We're still not sure how sustained it will be. I think it will be quite sustained now that interest rates have been cut. But, you know, January is always a bit of a weird month. There's not many sales. It, you know, can be a little bit uncertain. So
the data I'll share, so this is a macro view from our Ray White data coming down and different data sets, but from our group, so we're a group of about 160 people in the centre of Brisbane, and our data showed that it fell off a cliff in terms of open numbers in late December. We only know that data now that we can see it in the rear vision mirror, but in the last 3 weeks of December, we conducted 450 open houses, so a reasonable data set, with an average of 1.9 people through each open house. Well, compare that to the first 2 weeks or 3 weeks of January, about the same, 450. We had 4.9, so it's a huge swing, 1.9 to 4.9. In the first 12 days, it was actually 5.1. And so that is unusual. December normally beats January. And so this slide, when I saw it, I liked your heading, is this the quickest downturn ever? It's almost like November has met mid-January. I agree with you. We can't go and fire the crackers off and say, yeah, you know, it's roaring. But there was a lot of people that in December were really unhappy with the result, agents and vendors included. And they said, well, remove. Well, a number of them have come back to market in January, and the price they wanted at the start of December that they couldn't get at the end of December, they're now achieving. And we've got multiple examples of those across the city that we might touch in, Christine.
And I think the other point that Nerida's recently made as well is that there has actually been a tightening of stock coming to the market early this year as well.
Did you mention 13%?
Yeah. So, and I think that too was part of the downturn we saw. We just saw a lot of stock coming in spring, and obviously, you know, when lots of stock comes in, it does tend to flatten pricing. But it did seem to get absorbed, and as you said, that trend of things coming back on market in January and selling was quite consistent everywhere. Even
well,
in
across
like
4 inner city markets in Brisbane, we saw 70 properties be withdrawn from market in December. A number of those properties, I don't know the exact number, but I'd say at least 20% of those have relaunched in January and sold. So it was really interesting. Open numbers dropped off a cliff. There was a huge amount of stock this year. Our metric is after Australia Day, because you just don't know what's going to happen until after Australia Day when people come back from holidays. And stock is down by 13%, and we're 60% up on buyer inquiry through our open homes. Different market.
Really remarkable. I mean, I was talking to some agents this week. We had a property in Bulimba that was really struggling to get interest in the early 2 millions and has now just traded for 2.6 this year. You know, those sellers were thinking, if we can't get our money, we'll just wait. Well, the market's performed. We saw a unit in New Farm, was actually one of our colleagues' units, and who happens to be my cousin. And we were all on board to sell this property in December and just could not find someone to pay what we thought was a fairly reasonable price. in December, and the first 4 days of January, open numbers uplifted, and then the property transacted around that mid-ones level. So not all talking major, it's all spread through. There was another one, I think, a unit in Bowen Hills. Couldn't get in the 600s and then transacted for 650 early this year. So all sectors of the market have really come back to life. So really interesting to see that real life data as it's come through.
So looking at the impact of a rate cut, what would it do? Well, we had a look historically what has happened when we've cut rates after a period of no cut. And on the right, it shows, what's happened historically the month after. And Sydney is often the most sensitive. It makes sense, very expensive. People have much higher mortgages or require much higher mortgages. Historically, Brisbane has kind of sat in the middle with a sort of a fair, an increase, but not as much as say Sydney and Melbourne. But I think this will have changed, and I think it will change because Brisbane is so much more expensive now. So people do need lower rates more than they've needed in the past to be able to just get a mortgage and get into the market. So I think that the impacts will be.
Do you think people have held onto their properties because they feel like the interest rate's going to make it a bit more comfortable, and they decide not to sell? So Australians are very good at holding onto their assets and selling everything else. Do you think that's an impact to it?
Yeah, and I think too that at the end of last year, or spring last year, when we did see that surge in properties for sale, I think some of that was just distress. It wasn't distress, it was probably more stress. And people were like, I'll hold on to the family home, but I'll get rid of the holiday house, I'll get rid of the investment property, I'll pay down debt. Interest rates, everyone tells me they're coming, but I haven't seen them. And I'm really in quite a tough situation. So, but I agree, people, I mean, particularly a family home, like you'll do anything to hold on to that. But investment property is probably a little bit more disposable.
First time in a long time we were having conversations with owners at dining room tables that involved stress. Great distinction between distress and stress. It's like, these repayments are soaking up too much of my purse. Maybe I'll offload. But 25 basis points, $2,500 in every million borrowed. Like, you do wonder, is it confidence that's driving it, or is it money in the tin that's driving it?
Probably both.
Yeah, both, right? Okay. What about this growth?
So this is just Brisbane looking at again, I mean, you can't really see it, but that little tiny downturn we saw and then prices taking off again in January. Pretty consistent area, it's the inner suburbs of Brisbane that are seeing the strongest price growth. But, I think this is just the top 10 areas.
Yeah.
But, it shows that, prices are still moving very, very quickly in a lot of parts of the city. And then finance lending, I think probably the one to really point out here is investor lending is now at record highs. So there is an incredible amount of interest in southeast Queensland from investors, and what to do with the state of the economy in Queensland. There's been people getting out of Melbourne. Melbourne's actually seen a net reduction in the number of rental properties because there's been a lot of investors selling. And then I think just longer term performance, probably pricing too. I think particularly not so much in the New Farm area, but particularly in very, very low cost areas of Brisbane, we have seen a lot of investor activity, which has really pushed up pricing.
I think when you look at these next couple of slides around new property products coming to market, and you go, all right, well, rents have definitely risen over the last 5 years. Interest rates, some sign now that they may start to come down. Couple that with 10% capital growth over the last 12 months, and all of a sudden you think, well, holding's getting close to possible here. And that capital growth that I want out of an investment property, when I add it all in, yield and capital uplift, start to think, Queensland's a pretty good story, and we've got a couple of little aces in the pocket for what's going to come over the next decade. It does look like an update.
I would agree with you about the capital growth projections for investors. Even though the yield may not be quite there for them, they're definitely looking at that long-term 10-year hold for Brisbane, and that's definitely driving the investors.
Yeah, and with the lack of new supply, you think that's going to make it harder.
Which brings us to this one around housing supply. So we do have a big problem with housing supply in Queensland. Last year we needed 54,000 new homes. We built 41,700. It's probably one of the worst places actually in terms of building, and it's bad because of a few things. It's because there's a lot of projects on here. There's a lot of infrastructure projects. There's a lot of commercial developments taking place. Even rebuilding from flood affected areas has made a difference. But if you go to the next slide, we've also got very high construction costs. They've started to come back, so it's just really expensive to build. So you can't really even build at replacement cost at the moment.
Are they coming back or flattening?
Sorry, flattening. So growth is coming back. So yeah, they're not coming down.
Yeah.
I mean, it's not as bad as WA. So you can see here WA was getting good and was getting much better, but took off again. And the problem in WA is they're very dependent on bricks, and the green energy transition has been a problem for brick prices because they use gas. And so there's no other viable alternative. So WA need to switch to alternatives, but Queensland, it's not coming. I think that's the problem. It's not coming down. It's just flattening.
I don't know. I mean, look, there's lots of speculation around it, but I was at heard from a property lunch last week, and they were saying, maybe you could potentially bring labour up from other states. And the builders down there are saying, no chance. Like, we don't want to participate in this market. Seems to be the general feedback. It is expensive to build.
That's union driven.
Could be lots of different various reasons.
I've got a productivity slide, and that is a problem.
But for whatever reason it is, it's expensive.
Yeah.
And
low margins.
Yeah, low margin. And you're not going to get a time where a builder's going to turn around and go, I've saved a little bit over here, I'll pass it. It just doesn't seem to happen.
I got the bath for 20% off.
Yeah, I got a bit of a discount, it's going to be cheap. It's unlikely going to happen. So this is a problem that needs to really be addressed when you've got people coming over the fence from other states every week. And investors now as well coming in, as you say, you're not going to stop interstate investment. So we do need to work out the problem for properties.
I mean, and there's a report coming out next week that I'm presenting on looking at the capacity of the construction industry that we want to build, to get housing affordable in Australia, we need to build about 250,000 homes per year. The capacity of the construction industry, we just don't have it. They can't actually physically build more than probably 180,000. So how do you fix that? Well, you've got to either bring in more labour, as you said, or you try to make homes cheaper to build. So you start to change construction techniques. One of their ideas was to, if we start building homes that are all the same, that would make it cheaper. Yeah. But we don't like houses that are all the same. No. But that would definitely make it cheaper. And then things like looking at things like modular, could be an option.
What about changing town plans, more density?
Yeah, which is working in Melbourne. So Melbourne, they're building a lot, but then the problem too, and I think this is one of the things the Queensland government's grappling with, that you can absolutely loosen planning controls, but then do you want a developer going completely rogue, building whatever they want?
Yeah.
And it can be okay, but in some cases, particularly what we've seen in outer Melbourne, you're getting some really weird things happening in terms of what's being built and the lack of servicing, the lack of decent retail facilities, like a car parking. So yeah, there's always a fine balance with town planning.
Is this generally in sort of subdivision areas and where they're having
that's where it is in Melbourne. In outer Melbourne, we've really got that problem. So I didn't put up the slide with the productivity problem, but that is another challenge that we do in Queensland. Does have some very, very strong union activity, which does limit the number of days per week that a lot of builders are working, a lot of trades are working. And then just finishing, looking at 10 years, New Farm's still doing really well. So it's still the top. It's still the top growth area.
Interesting to see.
Yeah, it has doubled in 10 years. Yeah,
and very interesting to see Newstead and Bowen Hills in there, echoing on from what you just said as well about units.
Well, that Bowen Hills market, we've said it on here before. If someone turned up at your open house in Bowen Hills 3 years ago, they were lost. Right? No one was walking through your open house. They thought it was. What are you doing here, mate? I'm trying to have some peace and quiet. Now there's a line down the street and around the corner, and they are fighting to get into it. And that's just an absolute product of properties available.
Probably going to increase with the Olympics and everything like that as well.
Yeah, there's a spotlight on it. Urban's right on the shoulder of the city. There's lots of infrastructure all around it. But it just went raw when there was no properties available. Bowen Hills just got a spotlight on it, and it's good.
But it's getting back to 20 years ago, when you first started Ray White New Farm, no one wanted to buy a New Farm at that stage. It's extraordinary. I remember myself looking at New Farm, and there was no way I'd buy a New Farm.
Yeah.
But, look at it now.
One of the
so
first
things
sales,
change.
One of the first sales we did in 2005 was a riverfront home. And the owner said, when we bought here, our friend said to us, why would you want to be there with the junkies and the prostitutes? And they bought in 78. and they sold. It was a big development that took place. There was a huge home they owned on Griffith Street, Roxlade Drive, sold for $6 million on the riverfront. But you saw that 20-year uplift. Where you do see that gentrification, you do see the location. Like Bowen Hills is in the city. Spring Hill is in the city. Spring Hill's got to be a hot spot. Like when is it going to start to merge? But New Farm does have the beautiful parks and the cafes, and it was a no-brainer, a bit like West End. That it was going to go. Kangaroo Point has to be of the same ilk.
I think, so and then I suppose the other ones, the last three are probably quite interesting. Balmoral, Fig Tree Pocket and Rochdale, Burbank, that they actually have more than doubled over the last 10 years. So.
Just on the point of those last two, that really is in line with the trend that we've seen in the last couple of years, where people haven't been so much centred on the inner city suburbs, but still seeking the outer suburbs like Rochdale, Burbank and Fig Tree Pocket, where you're actually getting a lot more land. So those have really been dominating in the top end sales for those suburbs.
Yeah, lots of interest for that larger square metre space. All right, Matty, you and I have had some great conversations really already this year. The appetite for the prestige buyer, there's probably in the last week, I've had more conversations with you and our prestige agents of buyers so keen to buy between 10 and 20 million, which never woken up to before. The number of buyers in that space is quite extraordinary. Let's go through some of your learnings.
Well, look, it's interesting. I thought I'd just compare pound for pound, state by state. So Brisbane has seen 5 $20 million sales take place in the last 12 months. So I just did a little look at what's going on. There was 20 sales over 20 million in New South Wales. Victoria, there were around 10 over 20 million, and Brisbane's had 5. We have only had 5 because the Brisbane record was broken with a house at Amity, which is on the riverfront at New Farm, for 20.5 million last year. So there's been 5 since that. But if you're looking pound for pound, Point Piper, 130 million. I don't think there's any homes in Brisbane that to break the 130 million, and it's quite humbling when you're on a ferry going through the harbour in Sydney and you just keep seeing all the $100 million houses. But this house here, 32 Sutherland Avenue, it was a Ray White sale, has just transacted. We've pulled all this information from portals as well. So $23 million, which is incredible. It's a 3,050 square metre block, beautiful location, Sutherland Avenue. It's a beautiful street. But that's Brisbane's highest sale now, 23 million.
And probably important to say, all of these sales have been reported through the press.
Yeah.
Some of them have not yet settled. And I think that being one of them.
That is one of them.
Right? But these are the sales that are coming in. And it's probably fair to say, Matty, we're not saying the Brisbane River is the harbour.
No.
I think, you can't sort of say, oh, well, it's on the river, it's the same as the harbour.
It's just the wrong colour.
You have a look at that. But what we're saying is there are people that have that sort of money that they're prepared to invest in residential real estate in our country. And so 6 times the value.
And then you've got this property here in Toorak, which is just transacted for $150 million. So look, there's a few questions about, foreign investment that's coming now. The Albanese government is looking to ban foreign investment for a 2-year period, kicking in April. I think it is. A question.
Is that only for resale?
It's for established homes.
Yeah, they're not really meant to buy them anyway, but I think they're sort of shutting down the loopholes that people were kind of getting around it.
And I should be careful what I say here.
You should always be careful what you say here.
But what my experience is, there are a lot of loopholes that Chinese do purchase.
I'd say.
And a lot of sales that have happened in Brisbane have been from international buyers.
Or at least the money is coming from.
But they're blocking Australian residents as well. They've got to be Australian citizens in order to purchase. So if we go to the next slide. So here's a list of all the sales for Brisbane. 32 Sutherland we just spoke about. Beautiful home. Amity was the house that broke the Brisbane record at the start of last year, which was $20.5 million. That was a beautiful block as well. About 2,200 square metres on the riverfront, New Farm. Mimosa is a house in Hawthorn. Beautiful home across. Great sale for Brisbane being on the other side of the river from New Farm. That is the record for that area there. That was a beautiful home, architectural design on a huge block. And then again, Virginia Avenue, which is sold, which I've been led to believe that the purchaser of that is going to be spending $15 million on a renovation on it.
Wow.
Believe it or not. So that is the depth of that market. What I'm seeing on the front line is a lot of sales in the high end. There's just no stock. When you're going and looking at properties over 10 million, there's not a great deal of property available for sale. And we've seen a huge amount of interest coming through. So there are a lot of sales that are taking place off market and offers that are happening at the moment off market.
Now, Matt, you spend as much time in this space as everyone. I know, in fairness to the agents that were involved, we weren't involved in every one of these sales. But what we're seeing is a number of these were done with buyers actively coming to you or other prestige agents going, find me something. And I know a few of them some were on market, some were off market.
Well, I know all of those buyers that bought all of those properties, and they were not looking specifically for a geographical location. They were looking for a specific home in a blue chip suburb. So they'd been through all different markets, north, south, east and west, trying to look for the perfect home. So, but yeah, they're just incredible for Brisbane. There's a few that are being negotiated at the moment that is actually contest the Brisbane house price record again.
And as we go to Christine to talk more specifically on apartments, I would, just to validate, I would have had more conversations with our lead agents negotiating offers over $10 million in the last week than I would have had in the year previous. There's a strong appetite. There's a big disparity between what prestige top end is here and in other capital cities. We're not saying it's pound for pound, but we are saying it's a fairly significant gap, and the same buyers, well, they're happy to, those buyers that are buying Brisbane properties are probably the same buyers that are buying the Sydney, Melbourne properties. They've got the money to do it.
Just on those sales as well, all of them were Brisbane residents on all of those
I
sales.
think that's
a
really
good point.
important
All of them were
point to say.
Brisbane residents.
Yeah.
Not internationals, not Sydney, Melbourne, all from Brisbane.
Yeah, there's a lot of faith in that local market.
Yeah.
Christine, there's also another $20 million sale took place in the prestige market.
Yeah, so the apartment market continues to go from strength to strength. It's just been reported that a beautiful penthouse in the Pier building on the river at Newstead has sold for around the 20 million figure. And we can have a look there just to see the growth that we've had in the luxury apartment market in Brisbane just over the past couple of years. Sales there of 16.5 million for the Tom Dooley development, the Argyle, which is in Maxwell Street. Moray Street, again, this is an off-the-plan development that's sold for over 15 million. Another off-the-plan with Solano House in Kangaroo Point, which has become the second most expensive suburb in Brisbane for apartments. That's gone for just under 15 million. And we're now seeing the emergence of suburbs like Toowong as well, where we've got Arc Residences, which is being built by Greyer. Penthouse there, that's sold for just over 13.5 million. That's under construction. Again, Newstead, this is a non-riverfront penthouse in the Luminaire building that went for, Cavcorp, great local developer, that went for just shy of 13 million. And again, another local developer with a beautiful site, 156 Oxlade Drive in New Farm, the penthouse there transacting for over 11 million.
A lot of them have transacted over 30,000 a square metre.
Yeah, really. I mean, look, I know we've focused a lot on the entry-level part of the market in the last couple of sessions that we've done. So we've got a bit of a spotlight just to show you what's happening in the high end. We'll talk about some more entry-level sales as well. You've got a few case studies we'll bounce through.
Yeah, so the interesting thing about the apartment market in Brisbane is that the growth in apartments in the past 12 months has superseded houses. So the average growth for apartments in Brisbane was just shy of 13% for the last 12 months, whereas the house prices went up by just over 9%. Now, what we're currently seeing in the Brisbane market is the strongest unit market that we've ever seen since Expo 88, which is incredible. So we had a similar boom then in Expo, and that was driven by a shortage of stock. One of the most impressive suburbs where we're seeing great movement at the moment is Kangaroo Point. This particular sale was transacted by one of our Ray White Collective agents. Again, Matt referring to a lot of big deals occurring off market at the moment. These were buyers who'd really been looking, ideally they were starting a new farm looking for beautiful waterfront apartment, couldn't find anything and moved to Kangaroo Point. And this sale is actually almost, it's actually about a $600,000 increase in 12 months on the last sale in that particular building. Some other things that are really worth mentioning, just down the road from where we are today, there's a beautiful building, 443 Queen Street. Now that building was completed, just in the last couple of years, and we're actually seeing one-bedroom apartments there going for, there was a sale there for 1.65 million for a one-bedroom apartment,
Wow.
81 square metre apartment. That occurred in August last year, and there have been 2 three-bedroom sales, which have three two-bedroom sales, which have transacted for an incredible $3 million, which is extraordinary. So again, just recapping, massive growth for Brisbane. More than 60% for apartments over the past 5 years in some suburbs, and that is a trend because of the shortage of stock and people wanting that lifestyle. We see that continuing. And finally, just a little recap as well, reflecting on what Haesley said about the market starting strong. Where we are seeing the overall market perform well at the moment is units across the board for the lower price stock as well as the higher price stock. We had our first in-room auctions at the Carlisle last weekend with an incredible clearance rate of over 70%. Again, you can see the top end, some of the best performing stock. Property you sold, Matt, in Yabba Street. Again, Barden, that's a suburb that's really up and coming over the past 12 months with terrific growth. And apartments in Newstead, again, a non-riverfront apartment going for 2.65, which is great. As Hayes said earlier, there's a real sweet spot in the market at the moment that we're seeing. And the sweet spot that we are seeing is any house that's in that 1.5 to early 2 million range. Those sort of properties are going really well at the moment, high demand for them. They're lasting on the market in some cases for less than 7 days at the moment. And there's some of the sales that we did under the hammer last weekend.
Pretty incredible day on Saturday.
But they're the ones that sold under the hammer. There was also another 10 million worth of stock that sold prior to add to that. So 20 from 28 and it's now at 24 from 28.
Yeah, so we're sitting into the 80s. And Christine, what I love about it, look at all of those apartments. And from 570, 680, the day held all prices, but all parts of the market were moving.
Yes.
I got to see where the buyers were as the auctioneer. We had locals, but we also had one buyer from Chicago, one buyer from Auckland. There was another international somewhere, all online, but the locals really came home again.
It's an interesting one that you said from Chicago. At the moment, I've literally running 10 American buyers at the moment, and trying to work it out. Is it exchange rates?
Well, could be.
Could be.
It is,
We are looking pretty good on the exchange rate at the moment. We look like a doner kebab at 3 a.m.
I've just been to America, I know.
Bit of a bargain.
So yeah, look, just echoing on from that with the expats, one sector of the market that we haven't spoken a lot about that is very strong at the moment is expats. So, during the Christmas New Year break, reflecting what Matt said, we saw a lot of buyers from the US who are expats who just want to lock down a property now because they're coming back here within the next 5 years. So they're extremely strong in the market at the moment.
One of my great learnings out of the GFC was market changed. Obviously, fairly well documented. And we had these purchasers from London. They bought a 3-bedroom. They bought a $3 million one per floor apartment on Moray Street, and they called and said, we want to sell it. And it had dropped effectively to $2 million. So it dropped by a third, but they wanted a quick sale. I'm not sure if you remember, the Barmy Army was out around that time as well, and they were singing in pubs, you get $3 to the pound. Well, what happened was the exchange rate had dropped so much that the buyer on the conversion of Aussie back to pound sterling didn't lose a buck.
Wow.
Right? So the Australian price dropped 3 million to 2 million, but on the conversion back against a weakening Aussie dollar, they were able to backfill the price. So you reverse engineer that as an American today, what are we sitting in the 60s or
58.
something, 58, It does make Australia look lifestyle-wise, price-wise, really strong value. I'm going to give you just a couple of quick little notes from the front line. Here's a little advertisement. It's our 20th year. Ray White New Farm we started back in 2005. We've just launched our commercial division. So it's been long awaited for us. A lot of our clients have asked for a long time, but we're very much a person first. So we just hadn't found the right people that we could confidently say will do it well. And Neil, Patricia and Isaac are certainly a team that have done that. And if we can assist or you have any questions, we will be weaving into this over the next couple of catch-ups, how that commercial investment works and how we can help with that. I'm going to show you some really interesting graphs from the front line. This shows the last 4 years, quarter on quarter, the final quarter of the year, and our open house attendee numbers. Now, we did beat October to December 23 in October, December 24. But I'm telling you, that is not because of December 24. That's just a really strong October and a really strong first half of November. But that there is really, it's going to be even better. We'll look at this data for January to March, and you'll see that really step up. Unconditional sales, you can see that the dip did take place. So we were down year on year. We did 232 unconditional sales in the last quarter versus 267 the year before. This is information from our rental team living here. We manage about 1,200 properties across the city. The green lines show the last year, which is 2024 in the last quarter. You can see all sitting pretty equal. Probably applications in December about the same. Like it's all sitting, not standing out. A lot of people think it's just building. There's this back pain of tenants wanting to get in. A lot of them have found where they want to be in the market. They've changed suburbs. Leases, again, you can see that the 0 to 500 was firing in 2023. It's really pulled back. And look at that. All three in the last quarter of 2024, of quarter four in the price brackets, were down year on year. And that's a levelling out of the rental market. Arrears, of course, are strong, as in low. So very good for the landlord. You're not dealing with arrears like we have been in the market. So the data set's very much falling, that there's a real levelling out in the rental market, but coupling a strong return with rents going up, lowering interest rates and a high capital growth on a 10-year trend line, you would think that there's going to be a lot more investors in the market. That's taken us roughly to our 45 minutes. So as final comment, or to our guests that have turned up today, do you have any questions that you'd like to ask to any of our panellists that have come along? Yes, sir.
Sure. You made mention that there was an upturn in the open house attendance in January.
Yeah.
Do you yet have any data to suggest that is being sustained through the month of February as yet?
Yeah. So we're comparing, to give you the stats, which is a really great question. We compared January first 12 days versus January first 12 days the year before. So January first 12 days this year, average of 5.1 attendees. January first 12 days last year, 4.9 attendees. So January was pretty strong last year. Average number of attendees in December was 1.9, which we alluded to at the start. When we looked back over all of January, it was 4.9, and it's holding into February. So for the month so far, we are holding. We met 872 buyers in the last fortnight as a group. So numbers are still strong through the gate.
And is this the same for both houses and units?
Yeah, that's data taken across everything. But what we're seeing is units are really strong. Prestige market is really strong. And as Christine said, that band between 1.5 up to 3 million in houses, it had been a bit flatter last year. That's really come alive so far in 25. One of the things that we don't want to overinflate is that the prices have run. What we found out by looking at the data is the prices surprisingly dipped. And that seasonally makes no sense. You would think I'll launch in spring, but the people who launched in winter last year actually had a better competitive result than the people that launched in spring, because for some data, the supply demand thing was out. But now January, February so far is strong. And if this interest rate performs to script, that will have a positive effect. But definitely right now, an uplift of 60% more buyers than December, and they're not buyers that were in the market that have carried over. These are fresh new buyers into the market. Really good question.
A lot of the properties that were unsold last year that relaunched and came back on are fresh buyers.
Yeah.
Everyone, and it was really interesting, the inquiries that came up through January, not in the database.
Yeah, to highlight that 1.5 to 3, we had a property in Clayfield in Riverton Street last year. We just loved this property. We couldn't figure out why there wasn't a line down the street. We launched into January this year, 2 offers this week sold around the $3 million mark. The market shouldn't be that quick.
And not in January.
Not in January.
Yeah,
January just ripped the handbrake on.
The shortage of stock.
Yeah, I think Matt's point that 70 properties got removed plays a big role, you know.
But the cost of living thing didn't really play, because I saw so many people overseas. Like,
yeah, I think that's probably people you know.
I
yeah,
was gonna say, that might be a Matt Lancashire thing. I was like, oh, I'm going to have to bail him out of this one. Yes, sir.
In the inner city, the unit market, like Kangaroo Point, New Farm, there appear to be 2 tiers of property sales. There is the existing units in about the $10,000 per square metre, and then other new developments like Serrano, and they're only $30,000 per square metre. Can you comment on why there's this diversity between existing and new developments?
I could add a little bit of light
Yeah.
to that. Having transacted quite a few of those apartments in the older buildings in Kangaroo Point in the past 12 months, what's actually happening is a lot of those buyers are going, it's more cost effective for us to come in and buy an older style apartment that needs a complete renovation than to go and buy, you know, the newer style apartment, and they've got to have a lead in to get there. They're actually additionally spending, I sold a penthouse last year, a sub-penthouse. That buyer is going to spend another $2 million on it just doing a refurbishment.
And circa what sort of purchase price on the way in?
That was 4.25 on the way in.
So another half again on a renovation.
That's right.
We also find sometimes the square metre rate data gets affected in size. So we can see 80 square metre apartment selling for 10,000 a metre at 800,000, but that same 10,000 doesn't flow on to say 150 square metre apartment. And usually, I don't know why, usually the square metre rate goes down. The bigger you go, but there has been some examples where it seems to be going up, and whether that's because people are cashing out of homes, houses, downsizing, and they need a certain amount of space, so there's just more buyers available in that price range.
it's also new. It's generally smaller buildings. Are getting, and Riverfront are getting the bigger prices. So, and look, there's plenty of ways that they skew the data of square metre rates, how they do the application to it, whether it's on internal, plus balconies across the lot, plus car parks, minus car parks. So that data can be a bit skewed, but it's a lot of the Riverfront that's brand new in these luxury buildings that are achieving those 30 to 40,000 a metre.
Yeah, I mean, there's information coming out of Tenerife banks into the 40s.
40s.
Yeah, into the 40s.
That's a new development down at Tenerife at the
40s.
Right.
Yes, ma'am?
Nerida might be able to answer this, but just given the price rises across the board, how can we possibly expect the interest rates to go down?
So the Reserve Bank, they look at the housing market, but they're not there to influence the housing market. So their primary aim is to control the strength or weakness in the economy, and they do that by targeting inflation. So when inflation gets too high, they start to increase rates. When it gets because the economy is too strong, so they're slowing it down. When it gets too low, they cut rates to try and get it up again. The problem with housing, though, is obviously low interest rates does increase price growth. But ideally what it will also help with is getting more homes built. So one of the challenges with getting a home built at the moment is that prices for a new home are outpacing the prices for an existing home, particularly in outer suburban areas. So unless we start to get more investment into the building industry and we start to really get that firing, we can't close that gap, and we really need to close that gap to really get the market moving better.
These really, big sales, do they have an influence then on that outcome, with the...
Oh, do they skew the data?
Yeah.
The big sale? Yeah, absolutely. So one of the things that's quite interesting in Brisbane, it's a very expensive apartment market, but one of the reasons why is because the apartments are better. So people have always built bigger apartments here than in Sydney. We don't have such a strong student apartment market. A lot of them have been built in really highly desirable areas. A lot of them are being built in school zones. So, so you then get the median kind of looking very, very different to somewhere like Melbourne, where it's really cheap because they've got tons of cheap apartments. But the data can be a little bit funny to look at and sometimes hard to explain, but that's probably one that's quite clear here in Brisbane, is that the quality of apartments are better. Yeah, and that's we're now looking more at things like, well, what's happening within price points, because we know that, like, one of the things we did see last year particularly was that at the top end of the market things were really slowing quite dramatically, but the really cheap stuff was flying out the window, and that was getting really, really expensive. But yeah, I mean, they've got the RBA have got a whole building of economists, so there's a lot of people looking at data.
Anything? Could you imagine?
Yeah, I know. I mean, they definitely think things through. And the other thing, they do have a very good business liaison program. So they'll talk to us every quarter. They'll talk to people in the building industry. They'll talk to people in the gas industry. So they're not just sitting there with their models and doing data. They're actually out there getting on the ground knowledge. And I think that's a thing for an economist, which is, very valuable for me. As end of last year when I came to Brisbane for a presentation, and I was like, how's the market? It's still really good. And everyone's like, oh no, open for inspections are really starting to come down. And that didn't come out in the data until like start of January, when we saw December data that was happening. But that sentiment is just hard to pick up.
So you monitor numbers through opens, days on market and auction clearance rates effectively?
Yeah, we do. And then even auction clearance rates can be quite hard, because sometimes I could go into lots of data issues, but people measure it in different ways. Yeah. So, they may do it on all auctions that were meant to go on that day. So if it gets withdrawn, they'll say that auction didn't happen. Yeah, well,
or it didn't happen.
Well, they'll say it was meant to happen and it didn't, so therefore it didn't clear, whereas it may have been withdrawn to sell to someone.
Oh, okay.
So there's a lot of confusion around data, which makes it difficult.
We had a question online.
Yep.
What's the Bulimba market like between 5 and 10 million?
Oh, wow. So the Bulimba market at the moment, again, 5 and 10 million in Brisbane is very rarely suburb specific right now. It's very much a city-based thing. There's requirements, proximity to the city, livability, parkland, schooling, high streets all come into it. But buyer's agents are probably where we get our best and most reliable source. And our phones are ringing hot from prominent prestige buyer's agents at the moment with active buyers. And when we say to them where, they're like, show me anything in one of those high street locations. And a high street location in the city ring would be Bulimba, Ascot, New Farm, Paddington, South Bank, somewhere in that urban area, maybe to Toowong and that sort of region as well. So the Bulimba market, though, is exceptionally strong. You saw today 2 sales have taken place circa around that $20 million mark. I'm trying to think if I've got any specific sales that took place on the weekend. Can you refer to?
Not on the weekend at that price, not at the 5, 10 plus, but it was, there's been some really good off-river sales over 5. So Stewart Street sold at 5.8. There was, there's been about 5 or 6 sales that have transacted now between the 5 and 6 mark. Riverfront sales have all transacted, and they've got 2 sales over 20.
Yeah, if I was a person looking at the market right now and I was looking at timing, then it's just, I'm sure this sounds very self-serving, but conditions are better than we expected for right now. If you were thinking there, do I wait, do I not wait? I don't know, like interest rate dropping's got to be a good sign. Strong open house data's got to be a good sign. Lots of buyers coming in has got to be a good sign. But if you wait, say, a month, and 50 people in your suburb hear that it's a good site and they all launch, well then supply demand's going to come out and that's going to have downward pressure on price. It's really just a moment in time till we see what's happening with stock. But I would say the $5 to $10 million market, house market, would be really, really strong. Any other questions from the floor? Yes, sir.
Yeah, another one. Just with the increased incidence of house crime in
Yeah.
Australia, in your industry, do you see an increased demand for people wanting to buy into units because of the security that it offers?
Yeah, well, absolutely. Older people, for sure. So particularly, I mean, you guys could talk to the downsizer market, but having a big family home with a big block, and if you're travelling a lot and seeing family elsewhere or going on holidays, we definitely see that as a key trend. They just want the easy to lock up, leave. Crime might be part of it. It's probably maintenance as well, but that would definitely be a driver.
We are seeing there's one of the drivers of the big price in the apartment sales has been a demographic we call the right sizes, which are a lot of people coming from big homes going into like-for-like sizes of apartments. I think some of that has been security driven, but some of it has also been lifestyle driven as well. It's a big topic of conversation, obviously.
Yeah, look, I wouldn't want to overinflate it. We haven't seen any real evidence of people that are making
It's not a key driver.
Yeah, it's not. It wouldn't be a key driver. I would say not yet. A micro part of the market where it would be a key driver is someone personally affected. I think logic suggests that someone personally affected would change suburb or change style of property, but it's definitely not a data set that we've seen overwhelmingly that people have moved them at. Yes, sir.
We lived through the lead up to the Olympics in Sydney.
Yes.
How is Ray White taking the lead in assisting the committee?
Yeah, such a great question. So we're busting to get involved as much as we can with them. So where they can as a franchisor, I'm not sure if they're reaching out. We've spoken to people at the local level, Brisbane City Council. We actually have a really on-the-ground relationship with people that are talking about it. So we're trying to do what we can on a ground level. When we did the Sydney Olympics, Ray White was heavily involved in the accommodation. I'm not sure if any of you were there, but I was with the franchisor back then. We helped the accommodation of the village where the athletes went, and then the sales thereafter, and we're involved with that. But right now we're still waiting to find out where the Olympic Village is probably going to be and where it will be, but we will be first in line. We'll be camping out when they tender out who will help. But at the moment, largely a lot of us are just sitting on the fence to know where, and we do have some great, like everything they suggest seems to be an aha moment, like yes. Vic Park, Albion Dog Track, Wollongabba, like there's a lot of good bits of infrastructure around the city that could work. And I think they know, and they're just not letting us know just yet, but we don't have an active role yet other than what we're saying through auction events and on the ground level. We are definitely seeing purchases coming because of the Olympics, definitely. And every time there's a new announcement, there seems to be an uplift of inquiry in that announcement. So Wollongabba saw a real rise when they were talking about doing it at the Gabba. Hurst and Kelvin Grove saw a real rise. Just an inquiry. No one's actually purchasing yet with a stake in the ground, but inquiry bumps. And you'll see that when North Shore around Hamilton, when they talk about that precinct, or in and around Albion, as they talk about the dog track.
Sorry, another question. There's mainly been talk about mean prices in here. Do the median prices vary?
Oh, we've got a new data company called Neoval, and their view is that they use a geometric mean, and the way their modelling works, they believe that is a true representation of pricing as opposed to a median, which is the middle price. So it's very technical, but
I was thinking about those outliers and that's
yeah. So the way they do it is because. So just say like in any given month, if you've got a ton of sales that are taking place at the cheaper end, it can really make the median drop dramatically, but it doesn't mean it has actually dropped. It's just that the sample size is very much skewed to the cheaper end. So when they're doing the modelling, they assume in every month, every house is sold and what would happen to pricing, assuming that. So they then have to do a whole lot of modelling to say, well, what would have happened this month if a home sold in Bulimba for $4 million? So there's complicated modelling to try and account for that. But like most people, when they quote pricing, they do quote median, but a median can be quite misleading, particularly at a suburb level.
Yeah. All right. If there's no more questions online, it's been a thank you so much for participating. Thanks for your questions as well. Oh no, do we have one more online, Joe? Three more online. Let's fire them away, Matty. Call them out and we'll answer them.
Inner city Spring Hill apartment prices are also driven by new towers coming in line and flooding supply suddenly. What's happening inner city Brisbane on the front near future?
Okay, so it's Spring Hill. Spring Hill, definitely, if there's talk of flooding, they're certainly not building them yet. And by flooding, I mean flooding of apartments, not water. It's nice and high up there in Spring Hill. So there might be some talk of it coming in Spring Hill, Bowen Hills. All of those markets were definitely affected in the early 2000s, 2010 to 2014 with a big oversupply of apartments. That's not happening yet. There might be DAs, but there's certainly not release of huge buildings yet. That apartment market is still extraordinarily strong. Every market cycle is going to get affected as 100 units get released on the same day, but I do think we're a long way down the line, and I still do see strong Spring Hill as very strong pricing right now. What are your other two questions?
Should I hold my property in Hawthorn right now?
Look, you're never ever going to lose if you hold your property long term, but at some point you've got to decide when. So the answer to any sale is, what are you going to do with the money? If you've got a use of the money, or it's a time in life where you need to transact, and you're saying, should I sell now or in the next couple of months? While I can't tell you exactly what's going to happen in the next couple of months, I can give you this month current conditions versus last 3 months, and it would be definitely yes right now, because all the data sets are saying that it's there. Could it be stronger in 2 months? Of course. But if half the suburb lists because of strong conditions today, you're going to see a downturn. It is very strong today, and buyers are turning up to open houses.
And last question is, families looking to buy land holdings on riverfront, so like Brookfield, Yeronga, all those areas, maybe even on the north side, on the Kedron book, buyers seeing issues with flood-prone properties?
I'm happy to answer that.
I actually wrote a piece on this, looking at do people price in flooding and fires, and they don't. They seem to. The thing is that
short memories.
Very short memories.
And also, I think the insurance. They know the insurance has probably increased, but probably in areas of Brisbane it hasn't increased to such an extent that it's putting them off. It has in parts of Sydney, but people are drawn to water, bush, anywhere that's kind of a bit dangerous. They love it. So it seems to be that's the overriding. The other thing too, homes get rebuilt and are safer from flooding, and I think that's what's happened a lot in Brisbane.
Christine, you got a thought on that? We had the experience. Matt's, your comment of short-lived, short memories is in the months after a flood, without question. But the memory softens over time. Thoughts on whether it's affecting people buying waterfront?
Yeah, look, I think definitely in those flood affected suburbs, the question is always there. Did it flood? Which is true. But, we've seen Yeronga, for example, in the last couple of years, some tremendous sales in Yeronga post-flooding, and even Fig Tree Pocket last year as well. That was an area that was badly affected, and we've seen, that suburb hold $7 million plus sales again. So I do think that it's a question, but people go, well, it's a risk we take to be on the river.
I think that really sums it up. I think the thing is, if I'm going to buy on the bush, I want to be on the bush, and I'm aware that a bushfire could be there. If I'm going to buy on the river, I want to be on the water. I'm aware that water rises. That's got to be a factor. I think insurance plays a role.
Yeah, big insurance piece. What everyone wants to know, what's it insured?
Yeah.
What's insurance for?
And you've got to factor that in. Well, I hope that's been interesting to you. I hope you've got something out of it. We love presenting this every couple of months. Nerida, we're so grateful for you flying up every quarter to present this information. Christine and Matt, as always, thank you. Really wonderful contributions, some great data. To those of you that came along, thanks very much. And to everyone online or watching it later, we'll see you in about 3 months. Thanks for tuning in.
Thanks.